This is Nightly Business Report with Bill Griffith and Sue Herrera.
Halfway mark. The first half was marked by the return of volatility. Should investors expect more of the same in the second?
Oh, Canada, our neighbor to the north, moves ahead now with tariffs on U.S. products as tensions escalate with one of our closest allies.
Market Monitor, a top-rated fund manager who's outperforming the market this year, has a list of under-the-radar stocks he says are worth buying. Those stories and more tonight on Nightly Business Report for Friday, June 29th.
And we do bid you good Friday evening, everybody. Stocks got a lift today as, get this, we closed out the week, the month, the quarter, and the first half of this year. The market was helped by a big move higher in Dow component Nike, following that strong earnings report that we told you about last night. At its peak today, the Dow was up 293 points, but that rally fizzled as the closing bell approached this afternoon. And when all was said and done, the Dow gained just 55 points to 24,271. The Nasdaq was up 6, the S&P rose by 2. And for the week, the major indexes were all lower. So now we're at the midway point of the year after a choppy 6 months on Wall Street, to say the least. Mike Santoli takes a look now at what defined that first half and what may lie ahead for the second.
Stocks worked their way to modest gains in the first half of 2018, but they did it the hard way. The biggest January surge in 3 decades gave way to a swift 12% drop into February for the S&P 500 index. Since then, the broad market has been recovering in a choppy, fitful pattern, finishing the first half with a gain of a bit more than 2%. Among the issues investors have had to grapple with, a rise in interest rates to multi-year highs, a spurt in oil prices above $70 a barrel, and a flare-up in tensions and tariff threats with America's trading partners. These headwinds slowed the major indexes after a very strong 2017, but didn't stop them. That's thanks to a pickup in U.S. economic growth, strong consumer spending, and record corporate profits, in part due to the December tax cut package. In these opposing currents, some areas of the market have thrived while others have struggled. Big tech stocks remain the clear leaders, driving the Nasdaq to nearly a 9% gain. Energy also came to life, climbing almost 6%, and shares of smaller companies were favored as havens from a trade war, helping the Russell 2000 to a 7% first-half rally. On the downside, big industrial stocks suffered from the heated trade rhetoric, slipping some 4% and pressuring the Dow Jones Industrial Average to a slim 1% loss for the first half. And consumer staples sank close to 10% on steady shortfalls in profits from big food and household product companies. The outlook for the second half of the year will hinge on how the Federal Reserve proceeds with interest rate policies, whether the trade issues near some resolution, and how much economic and corporate profit growth might slow toward year end. History shows that midterm election years are often choppy for stocks through the summer, which is yet another complication. But with profit growth set to rise close to 20% for the full year and stock valuations well off their January highs, Wall Street's bulls are betting that business conditions are sturdy enough to absorb some more political noise and perhaps even 2 more rate hikes from the Fed. For Nightly Business Report, I'm Mike Santoli.
So let's talk a little bit more about the second half with Christina Hooper, Chief Global Market Strategist at Invesco. Good to see you again, Christina. Welcome back.
Great to see you. Thank you.
Will the second half of the year, do you think, be marked by the type of disruption and volatility that has been characteristic of the first half?
Absolutely. I think it's very likely we're going to see that because we have the same drivers in place. Specifically, monetary policy is being unwound. And this isn't just ordinary monetary policy. This is experimental monetary policy. And so unwinding it is an experiment in and of itself. What I think is going to happen is we're going to see continued normalization of capital markets as we normalize that monetary policy.
You also see higher prices. You see a little slower growth. Is it enough that you would tell investors to start thinking about investing in traditional inflation hedges?
Traditional inflation hedges should always be part of an investor's portfolio. So if it isn't, they should include it in there. And there's a wide array of options, from commodities to Treasury inflation-protected securities to income-producing areas like dividends, which have historically held up well in rising inflation environments. So there's a lot of options to choose from.
What about going globally, Christina? I mean, the U.S., you expect growth to slow a little bit, certainly, but the trajectory is still higher. What about investing outside of the United States?
Well, if you were to have invested outside the U.S. in the first half of this year, you would have been disappointed relative to the U.S. It's pretty much a sea of red year to date. But having said that, there are different drivers for different economies and markets, and so it makes sense to be very well diversified. Yesterday's winners may not be tomorrow's winners, and so we need to hedge our bets with diversification.
Christina, thank you so much. As always, Christina Hooper with Invesco. Bill?
Thank you.
And on this last day of the first half, a new report showed that inflation has in fact hit the Fed's target of 2%. It's the first time the so-called PCE index, which is the central bank's preferred inflation gauge, first time it's hit that level in 6 years. The acceleration in inflation came despite a moderation in consumer spending, though. Another report showed a 0.2% gain last month. That was below expectations. In fact, consumer spending is closely watched because it does account for more than 2/3 of U.S. economic activity.
But consumer sentiment improved slightly this month. According to the University of Michigan Index, Americans are feeling better about the current state of the economy. But details of that report were mixed. Americans lowered their expectations about the future, with many citing trade and tariff concerns.
And those trade tensions were ratcheted up today when Canada said that it was moving ahead with tariffs on U.S. products. Kayla Tausche is in Washington for us tonight.
1 month after Canada started paying new tariffs to send steel and aluminum to the U.S., Foreign Minister Chrystia Freeland, flanked by steelworkers, says they're striking back.
We are acting very much in sorrow, not in anger. But the U.S. tariffs leave Canada no choice but to defend our industries, our workers, and our communities.
Starting Sunday, U.S. ketchup, candy, and toilet paper, as well as steel and aluminum, will see new fees at the border. Canada's retaliation comes after similar actions from Europe, Mexico, and China. Some $20 billion in U.S. goods targeted in all, from politically sensitive states like Pennsylvania and Kentucky. This week, top U.S. trade official Robert Lighthizer called the retaliation unjustified, saying it showed blatant disregard for WTO rules, referring to the World Trade Organization, which governs cross-border business. The White House believes its actions are WTO compliant, but the counterpunches are not. The moves against the U.S. have bolstered President Trump's disdain for the organization, and new reports suggest he'll move to withdraw. An outside advisor to the president says this may indeed be the catalyst. Even Larry Kudlow, White House economic advisor and avowed free trader, has raised his own doubts.
The World Trade Organization, for example, has become completely ineffectual. And even when it makes decisions, even in the rare moments when it makes decisions, important countries don't even abide by them.
President Trump believes the tariffs, while painful for now, are working.
Many countries are calling, saying, let's negotiate. They were never doing that. They're saying, let's negotiate, please, we want to negotiate.
That strategy will be tested again next week. On July 6th, the U.S. will add new fees onto $34 billion in Chinese imports, and China will add new tariffs in return. White House officials are telling businesses to expect those to go into effect, barring any last-minute deal. For Nightly Business Report, I'm Kayla Tausche in Washington.
General Motors warns that some of the tariffs on imported vehicles being considered by the Trump administration could lead to a, quote, smaller GM. The largest U.S. automaker also said that expansive tariffs risk isolating the company from the global market. In May, the White House launched an investigation into whether imported vehicles pose a national security threat. Shares of GM were down more than 2.5% in today's session.
Mexican voters are heading to the polls this Sunday in an election that could shift the political paradigm in that country. And the results could have far-reaching implications for trade and business as well here in the U.S. Michelle Caruso Cabrera has more for us.
The next president of Mexico is likely to be a man who goes by the nickname AMLO. It's an acronym for Andrés Manuel López Obrador. He has run for president twice before. Looks like the third time is going to be the charm because he is way out ahead in the polls. He's historically been known as a real radical leftist. Sometimes he's been compared to Hugo Chavez. This time around, during this campaign, he's moved much more to the center, even though he's definitely left-leaning in his economics, right-leaning in his social policies. Some in the administration had been worried about his rise to power and had tried to push for NAFTA to be renegotiated before the election because they thought it might be tougher to get a deal done with AMLO in power. There's some thinking, however, that maybe it actually might be easier to get a deal done. He's very much a nationalist, and maybe the president might actually like him a little more than the current president of Mexico. Additionally, the U.S. would like Mexico to raise wages. Right now, manufacturing jobs down there pay only $4 an hour compared to $39 an hour here in the United States. And that's why so many companies often move their businesses down there, at least their manufacturing jobs down there. AMLO pretty much agrees that wages should go up. And so maybe there's some place to find consensus there in a way that previously hadn't been thought. Still, there's a long way to go before the NAFTA negotiations are done. For Nightly Business Report, I'm Michelle Caruso Cabrera.
It is time to take a look at some of today's upgrades and downgrades. Walgreens was downgraded to hold from buy at Jefferies. The analyst cites new competition from Amazon, which we told you about yesterday. That, the analyst says, could weigh on future earnings. The price target is $65. The stock rose just a fraction to $60.02. Nike's price target was raised to $84 a share at Bernstein. The analyst cites the Dow component's strong quarterly results. The firm maintains an overweight rating on that stock, and it rallied 11% to $79.68.
A different analyst at Bernstein cut Diageo's rating to market perform from outperform. The analyst there says he believes the rally in that stock has come to an end. Shares have risen about 19% in the past year. The firm also notes that the potential for some Diageo brands to face challenges in case of a global trade war breaking out. The stock rose 1 penny today to $144.01. Shares of KB Homes were upgraded to buy from underperform at Bank of America. The analyst there says concerns surrounding the home building sector are overblown. Price target $37. That stock rose 7% today to $27.24.
Still ahead, fire sale, why the young California cannabis industry is offering deep discounts to its customers.
California has now passed the strictest online privacy law in the country. This law gives consumers sweeping control over their personal data and grants them the right to know what information companies like Facebook and Google are collecting on them. The law takes effect in 2020.
Also in California, new laws governing the cannabis industry take effect this weekend, and that means a lot of businesses are scrambling to sell inventory that won't meet those new requirements. Aditi Roy is in Berkeley.
Marijuana is flying off the shelves at the Green Cross dispensary in San Francisco. The lines are long because the discounts are deep. Some cannabis products up to 80% off.
CBD used to be, what, like $20, $30. Now they got Green Cross, got it over here for $5 an eighth, which is way better. It's not hurting my pockets.
The reason? 6 months after the state of California legalized recreational marijuana, new regulations are scheduled to take effect July 1st, which require all cannabis products on store shelves undergo extensive lab testing for pesticides, pathogens, and potency. So pot shops are trying desperately to unload their untested inventory before it becomes illegal. The president of the Green Cross dispensary, Kevin Reed, says they slash prices as low as possible so they won't have to toss out the pot.
There's lines going out the door and down the sidewalk. It's like it's 420 every single day.
But labs that test cannabis products are busy too.
We have seen about a tenfold increase in inbound inquiries.
The new testing requirements are creating a backlog at marijuana labs like Steep Hill in Berkeley. It's one of only 31 marijuana testing labs in California, a state with more than 400 licensed retailers. Chief Revenue Officer Tony Daniel says he doesn't expect demand to subside anytime soon, so they're hiring 200 workers by the end of the year and moving into a bigger building.
Sales looks kind of like a hockey stick right now. And we anticipate that trend to continue. Cannabis is here to stay. The genie's out of the bottle. So we're moving into every legal jurisdiction and internationally as well.
Other labs are experiencing turnaround delays. Reed says the lab he works with is taking several days longer to get his weed back to him, forcing him to leave inventory in quarantine while he waits for the test results. While he waits, he worries.
We're going to have a lot of empty shelves come July 1st, and we're going to do what we can to get those shelves full again as quickly as possible.
Some in the industry worry that this latest set of regulations will drive out some of the mom-and-pop retailers and lead to bigger, more corporate names driving California's marijuana market. For Nightly Business Report, I'm Aditi Roy, Berkeley, California.
A buzzkill for the maker of Corona beer, and that is where we begin tonight's Market Focus. Constellation Brands reported quarterly profit that was below expectations. Freight costs, coupled with a rising dollar, pressured its operating margins, and marketing expenses were also higher. Shares fell more than 5.5% as a result today to $218.87. Meanwhile, Deutsche Bank's CEO said today he remains committed to his company's U.S. unit, despite failing the Fed's stress test this week, something we reported on yesterday. In an interview today, he added that he is confident that his bank is on the right path.
First of all, we have done a lot already. We see the progress, but we are also aware that more needs to be done. That is all in the plan, and therefore we are confident to get over this over the next 12 months.
Shares of Deutsche Bank rose more than 1% today to $10.62.
Novartis and Gilead Sciences won the backing of a key European panel for their separate cancer cell therapies. That move likely clears the way for approval within months. The European Commission has the final say before those medicines can be sold. Novartis gained more than 3% to $75.54. Gilead shares were also higher. Greenbrier reported earnings that blew past analysts' estimates for the second straight quarter. The freight transportation equipment supplier reported a rise in new orders that were helped by strong demand for its rail cars. The shares rallied 12% to $52.75, its best one-day percentage gain in more than a year.
Time for our market monitor. He's investing in mid-cap stocks. He's got a 5-star rated fund by Morningstar. His fund is up 14% so far this year, easily outpacing the broader market. We welcome back Stephen DiNiclio. He is portfolio manager at the Federated Kaufman Fund. Stephen, good to see you again. Welcome back.
Hey, great to see you. Thanks for having me.
These mid-caps now, I mean, I keep hearing that people are expecting the small caps and the mid-caps to outperform in the second half. Maybe the large caps have become too expensive, trade worries, all those things. Is that what you're looking at here as well?
Right. Well, actually, I think the appropriate way to look at it is not so much small versus mid versus large, but is actually value versus growth. Right now, we're coming off 7, and this is the last day of the second quarter from a trading perspective. We're coming off of 7 consecutive quarters of accelerating GDP on a year-over-year rate. We have never had that type of growth before. It's only happened one other time since the 1940s. So in that environment, everything has won, right? We've had low volatility, high growth, and an accelerating economy. Mm-hmm. Now, while we don't think the economy is necessarily slowing, it's still going to be good. That rate of change is going to slow, meaning we're going to be getting better, but at a slower rate. Okay. In that environment, coupled with higher interest rates, typically growth stocks outperform. Companies where you don't need to worry about who's president, trade wars, interest rates, what's going on in the government. These are companies that are creating their own innovative solutions and helping customers make money and improve their own efforts.
So let's talk about, you gave us 3 picks. I don't know if I'm going to pronounce this correctly,
sure,
but it's a play on the electric vehicle growth. Albemarle Corporation?
Correct.
ALB?
Absolutely. Look, we are at the dawn of a revolution in electric vehicles. Electric vehicles, for all the press they get with Tesla, are only 1% of overall new car sales in the world. We think that 1% is going to go to 10 to 12% over the next 5 to 7 years. Electric vehicle sales globally are up over 50% in 2018. You're going to need a lot of lithium.
Okay.
Right now, there's this narrative on Wall Street that says lithium is oversupplied. We don't think that's the case. This is a specialty material, not a commodity, and Albemarle is the most profitable point of the value chain to invest in electric vehicles today.
Couple of seconds left to talk about these other two companies, which are similar in business model. You've got Tyler Technologies and Viva Systems, sort of like Salesforce, I guess, huh?
Absolutely like Salesforce. Look, the comparison between the two is they make governments and life sciences companies more efficient. They make their sales process better and more efficient. Both companies have very high customer retention rate and very high recurring revenue. So again, in this volatile time, and look, 2018 is already twice as volatile as we saw in 2017, you're going to need companies that have high recurring revenue and good line of sight into growth.
Very good. Stephen DiNicolio with Federated Coupon Funds. Good to see you again. Thanks for joining us.
Good to see you. Thank you.
And coming up, ride sharing in the sky is causing annoyances on the ground at some Tony summer getaway towns. The president's new tax law was passed 6 months ago today, and today the Treasury Department and the IRS unveiled a draft of a revamped 1040 tax form. And yes, it really is the size of a postcard. The agencies claim that the new form will streamline the tax filing process for more than 150 million people next year. One thing, though, the IRS does say that nearly 90% of Americans filed online this year.
Citigroup will refund more than $330 million to credit card customers. Those customers may have been overpaying interest on their credit cards. The settlement with the Consumer Financial Protection Bureau will refund more than 1.7 million customers. Earlier this year, Citi disclosed that it had used a flawed methodology when determining which customers were eligible for a rate reduction.
Well, a part of toy history is now gone. The last of the remaining Toys R Us stores are closing their doors for good this week. As you know, the once popular toy chain filed for bankruptcy back in September. And today, a simple message was posted on Toys R Us website that read, "Don't ever grow up, play on."
Are you tired of getting stuck in traffic heading to that resort town, maybe for this weekend's getaway? Well, helicopters have been the desired mode of transport for several years now, and they're now swarming over rich beach towns around the country. New technology making it easier and cheaper to book, and that could mean more headaches for the residents in years to come. Robert Frank is in East Hampton, New York, with more on the battle brewing over helicopters.
It's a picture-perfect day here in the Hamptons, which means cocktails, parties, and noisy helicopters. The business of ride-sharing in the sky has exploded across the country as companies make booking a seat on a chopper as easy as booking an Uber. Here in the Hamptons, Blade was the pioneer, offering seats for $700 to $800 from Manhattan to the Hamptons, turning a 3 or 4 hour wait in traffic into a quick 40-minute chopper ride. This summer, a new competitor has landed, Blackbird. Founded by a tech entrepreneur, they are more like Expedia in the sky. You can go on their app and book a seat on any of the local operators. They already have 100,000 people on their app, and they've flown 4,000 people to the Hamptons just since Memorial Day. We booked a flight today on Blackbird and flew on a carrier called Foxtrot.
We are just landing in East Hampton, 42 minutes after takeoff from Manhattan.
We are like Airbnb for flights. Most private flights only have about 15% occupancy on those flights, tons of open seats. And so we bring together all of those flights for people to book.
Now, Davis said that new technologies and helicopters could make that ride even cheaper. Perhaps in 10 years, the ride from Manhattan to East Hampton could be as low as $50. But that would make the caravan of loud helicopters flowing into quiet mountain retreats and beach towns like this one, even noisier. Last summer, there were more than 6,000 helicopter takeoffs and landings at this small airport. In August, that averages nearly 100 a day, creating what some locals call a war zone.
It's very loud, it's stressful, it's distracting. You could be on the phone, you could be reading, you could be having a meal with friends, you could be sitting on the deck just trying to relax or enjoy the peace and quiet of your home, and it's constantly disrupted.
Blade and other companies say they are buying quieter aircraft and trying to spread out the traffic over multiple airports. But there are only so many places to land in the Hamptons. The town of East Hampton is threatening to shut down the airport in 3 years if things don't improve. Hamptonites also complain that the choppers are bringing in a much younger and rowdier group they call riffraff, who don't respect the community. Of course, only in the Hamptons would people who pay $700 for a helicopter ride be considered riffraff. For Nightly Business Report, I'm Robert Frank in East Hampton, New York.
Okay. Before we go, let's take a final look at the day on Wall Street. The Dow was up 293 points at one time, but just finished up 55 points. NASDAQ up 6. The S&P was up 2. Now, it was the worst first half for the Dow since 2010 by being down nearly 2%. The NASDAQ had its 7th first half gain in the last 8 years, and the S&P first half has been positive now for the last 8 years.
Wow.
Pretty good.
Pretty good indeed. That'll do it for us tonight. Thanks for joining us. I'm Sue Herrera.
I'm Bill Griffith. Have a wonderful weekend. We'll see you Monday.